Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to discuss the total devastation that Powell's speech has had and the market and what was said and what it potentially means. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I would suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So basically what has happened is Powell, as we were anticipating, has sunk the market. And the hawks are practically dive bomb the equities. Nasdaq actually fell 3.9% on Friday, and the S&P 500 crashed by 3.3%, and that's the biggest one-day loss since the 13th of June. But what was actually said? What was actually said on Friday? Powell said this, and I quote, "Restoring the price stability will likely require maintaining a restrictive policy stance for some time." He went on to say, "Historical record cautions strongly against prematurely loosening policy." Now, those of you who are kind enough to join me Friday morning, I discussed that if Powell mentioned, because he likes doing history lessons in his speech, if he mentioned two words, which is the 1970s, then that would really spook the market. And the reason for that was back in the 1970s, when unemployment was at 3.5%, same as it is now, the Fed reduced interest rates, which caused a recession. So basically, this is what he's saying. He's saying historical records caution strongly against premature loosening policy, like reducing rates. So this underlines the fact that he's not going to be reducing interest rates anytime soon. He also said, "We'll keep at it until we're confident the job is done, i.e. get inflation down to 2%. Plus, he also said the labor market, here we go, the labor market remains strong, but the Fed's campaign to hike rates could restrict economic activity and lead to a softer labor market," which he's happy to do. So basically, now the job market is all in focus, and the dollar continues its rampage. So let's have a quick look at the market and see actually how everything stands. Now, this is the euro, currently trading way below parity at 0.9941. At the point of the speech, it spiked up, but then as reality set in that he is going to be more aggressive with interest rates, likely to raise by 75 basis points, you saw dollar strength, you saw the market crash. Current key area of interest is 0.99287. Sterling, same thing, absolute carnage, crashed as well against the dollar. So currently trading at 1.1690. Dollar yen skyrocketed, almost touched 139. So dollar strength on that. Gold also sank way under that key level now of $1,727, currently trading $1,721. So pure dollar strength. And like I say, equity market took a hammering. S&P 500 definitely questioning now that the bear market rally is finished. Currently trading at 4,028 points. If you look at a bigger picture, you can see, like I say, it's way under that key level now of 4,099 points. Finding a little bit of buying around 4,009 points, but still, we have got a very spooked and scared market. Other things. We have a big week ahead. Let's go through some of these key events coming up this week. Sorry, throat's a little bit dry. So Tuesday, we have German CPI, which is the expectations 8.7%. Then Wednesday, we have EU CPI. Expectation is 9%. It's currently at 8.8%, so 9% increase, I reckon. CAD GDP is due on Wednesday as well. Expectation is 4.3%. Thursday, a big day again on Thursday. US ISM manufacturing expectation is 52.6. And finally, Friday is the big one. And it's all going to be about this week, is the US NFP due at 12:30 p.m. UTC. Expectation is for it to come in at 290,000. Don't forget, last month, it surprised us massively by coming at 528,000. So they say the labor market is going to be key because, like I say, according to Powell's speech, he's happy to let the labor market soften. So yeah, that's what we got. Because it's the big event, I will be doing a watch along on this event. So I will be doing a watch along at 12:20 p.m. UTC on Friday. So please come and join me for that. It should be pretty exciting. So like I say, Powell and the Fed are happy to sacrifice the labor market as long as they can get inflation down to 2%. So that's how it is. So a big week ahead of us, massive week ahead of us. Like I said, we've got, German CPI, German unemployment rate, EU CPI, German retail sales, US ISM manufacturing, and US NFP and US unemployment rate. So a massive week ahead of us. As the market currently stands, we have the FTSE negative 0.66%, DAX currently trading negative 1.07%, and Eurostoxx 50 currently trading negative 0.10%. So yes, so there we have it. We were anticipating Powell. We were talking about it all of last week. All of last week, we were talking about it, building it up, and he certainly did not disappoint the market one bit. And he actually, like I say, really has spooked the market because he has underlined the fact they are dedicated to raise interest rates. They don't care if it slips them into recession, but they want inflation down to 2%. And they're not going to finish till the job is done. And this is why we have a very, very scared market at this particular moment and time. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Entirely up to you. This is a live broadcast after all. And by all means, share me your opinions. Let me know. Do you think, 75 basis point in September? That's 21st of September, don't forget. Hey, James. Hey, Philip, how you doing? Yes, well, absolutely. Absolutely. I mean, it's going to really put the property market in a massive amount of pressure, Philip. Good to see you, by the way, buddy. An awful lot of pressure. Already, the housing market is feeling the strain because, of course, more aggressive interest rate hikes, more expensive mortgages are. So it's going to cause a massive amount of pressure on the housing market. It really, really is massively. So you're absolutely right. And I think that's going to be a big problem. Don't forget, I don't think it's going to be as severe as it was back in 2008. But when the US had a housing market crash last time back in 2008, it put the whole world into a massive global recession. It was the beginning of the credit crisis. So yeah, that's going to be a big thing as well, buddy. I totally agree with you. What do you think of United, by the way, Philip? A bit better, isn't it? It's a bit of sign, a little bit better. It's really good to see you. Really good to see you. Any other questions at all? Anything else? Oh, I expect, some investors to sell rental properties, meaning more supply. The thing is, the rental rents are going up considerably. So those who have landlords are making an absolute killing on it. So I'll be really surprised. If they start selling their rental properties, because if people can't get onto the market and can't buy because interest rates are too high and too expensive, then people have to rent. So I'd be quite surprised if they start selling it. But it's a really, really serious problem, a real serious problem. Yeah, we are back slightly. Early days, still got plenty to go. We still got plenty to do, but it's looking slightly better. It's certainly better than it was 2 weeks ago, buddy, after Brentford, which was shocking. Really good to see you again, buddy. Really good to see you. Any other questions at all? Not a problem. Don't forget, if you think of a question later, okay, put it in the comment section below, either on Facebook or YouTube. Welcome, Anthony. Yes, true. It's nearly 100 million, isn't it? It's most third biggest expensive, second most expensive player United ever bought. But yeah, welcome indeed. Let's hope he's worth the money. Hello, good to see you as well, by the way. Like I say, if you think of a question later, put it in the comment section on either Facebook or YouTube. I will see them and I will reply to them next time I go live on air. In that case, if there's no further questions, shout out to Philip. Great to see you, buddy. And thank you for your interaction. Shout out SMF790 and shout out to all of you for coming along to watch me today. I really, really appreciate it. As I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful, and you've put up with me, my over-the-top enthusiasm for the market, which I simply just cannot help. give me one of these. It's nice to know. I've still got one already. It's nice to know that you like what I do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.